Welcome back, everybody. Back to another podcast today. I'm Tony,
I'm Alexander.
and we're going to be talking about big tech and where we think they're going to be in the next year. So let's get into it. Hey everyone, this is just a disclaimer. Alexander and I are not financial advisors, and this is not financial advice. So do not take our words and go and invest off of what we are saying, because we do not have any certifications whatsoever to let anyone know what to invest on. We are just trying to give information to people. Anyways, with that said, enjoy the video. Alright, so we're going to be getting into our stock picks, and we're going to talk about big tech and what we think they're going to be doing in the next year, right, Xander?
Oh yeah, I think we're gonna have some good, maybe some crazy valuations, but we'll see. And you'll hear our side, or at least what we think's going on with everything. And I think that we're gonna see a good 2026. Honestly, I don't see anything wrong. I think lots of people are thinking about like this AI stuff being a bubble. I don't think that's the case. We've seen some earnings. I want to wait until February before my full thesis is out, but I'm pretty sure we're fine.
Yeah.
And as long as these February earnings are good, it's gonna be early February for most of these stocks, anyways. Like Microsoft, Meta, pretty sure Microsoft, Meta, Google, most of them are fairly around the same time. So, pretty sure we'll see some good earnings in February, but I'm not sure. I think Oracle's a late one because we just had Oracle's earnings. They weren't bad, but they have lots of spending going on with their AI stuff. So we'll see how that turns out. But I'm pretty sure for the most part we should be fine, and I don't think we're in an AI bubble for the market's open actually right now, so it should be a live chart.
Let's see what we got here. We'll start off with Meta. I think Meta is probably one of the best companies in the Magnificent Seven as of late 2025. So we'll see what's going on with it. It got pretty beaten up, Xander. Talk about that.
Yeah, it did. It got beaten up a lot actually. It was right before earnings around November. Got ran to like 750-ish, mid 750s, and they missed on a one-off tax implication, and that drove the stock down to around 680 where earnings were, and then people got scared with their spending, which honestly wasn't that bad, and then it got driven down even more, and I think it ended around 580, and now after November, so after there's lots of money put into Meta calls for November 21st. There's around like 50 million for November 21st. If you look at the chart actually at home, you can see right after November 21st, Meta flew back to like 680, 685, and then it consolidated around 650, and it's at 665 around there right now. The market's open, so I'm not sure exactly what it's at. But yeah, 662. So it's gonna sit in this range for a little bit. Today's probably gonna be a little bit red for the most part, just because it's after Christmas. And then honestly, I think we'll see it, and because tax loss harvesting is gonna start. If it already has, or if it might have already happened, honestly, because of all the red we've already seen. But I think that Meta will be fine. I think that every tech company will be fine as long as we start to see lots of improvements in their earnings. But yeah, like I was saying, Meta was really heavily manipulated, and they should be around after these earnings 720. We could see for sure that's like 10% for Meta.
So yeah, we saw them go down from 750 to almost 580.
Yeah,
it's been pretty crazy. I think Meta is still a great company. Their price still pretty cheap. They're probably the cheapest in the Magnificent Seven right now. But,
yeah.
I don't really know. There we go. Chart finally loaded. Okay, so we got what do we got here? 750, and then it fell after earnings. Yeah, down to 580, 590. Yeah, their price to earnings is 29.
Yeah, for the Mag 7, you don't really look at for lots of these big tech companies, price to earnings isn't that good of a multiple to look at, but you still look at it in general just for companies, just to understand what's going on. And you mainly look at the price of sales, right? That gauges how much more growth the company actually has, right? With future guidance and everything baked in. But I do think Meta will be fine. I do like Zuckerberg a lot. I do think he is a good CEO.
Yeah, I love Zuckerberg.
Yeah.
The difference with Meta is the reason they went down last quarter, everyone's scared about all the big AI capex spending, right? So the thing for me is if AI isn't what it all seems to be and it doesn't play out, these companies are probably going to fall apart because they've been dumping money into these AI infrastructure build-outs, right? Building data centers, building the actual technology and laying down the lines to actually get enough energy to make this AI. Meta is no exception. They're dropping an unbelievable amount of money, almost scary to some investors, and that's what's kind of shying them away right now from Meta, which is, I wouldn't say it's unconventional for Zuckerberg to do this, because when he goes into a company, he goes all in, or when he goes to invest into something, he goes all in. And he's doing that right now with AI, just like he did with the metaverse. But the difference with Zuckerberg is he's good at listening to what the people like and don't like. Like when he invested all that money into the metaverse, he got awful feedback on it, and everyone was like, whoa, 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 hold your horses, this is a little crazy. And he actually ended up pulling that investment away, right? So that's kind of the difference with Zuckerberg, in terms of he is very coherent and he's very flexible with changes. Like nothing is always set in stone with him, which I really like about him. So I think he's a great CEO, and we'll have to see if this AI data center bet pays off, because they got a lot of money and they're spending it. So,
yeah, I think even if this stuff doesn't play out, we've seen already, Meta's generating so much money from their ad revenue and from WhatsApp and things like that. So honestly, no matter what, I think Meta will be fine. Meta's proven themselves time and time again in terms of what's happened. Like Meta is not good and bad when the economy is bad, right? Because they make all their money off ads.
Most.
Well, yeah, but they make their money off ads, right? So if in COVID, nobody's gonna be running as many ads or sponsors with people, meaning Meta's not gonna be generating as much money. And then we saw that if we go back to COVID, Meta died, and then it rebounded really hard, and they proved themselves time and time again. So I think if you zoom out, no matter what, Meta should be good as long as we keep reporting good earnings. I wouldn't look at their last earnings as a miss, honestly. If we take out the tax hit, they smoked earnings, and if they didn't take this tax hit now, they would have had to take it later, and it would have been even heavier. So it's good that they took it early. It's good they recognized that, and they didn't get a bypass by the tax hit. I'm pretty sure they did one time. It's just unfortunate that they didn't, which is fine. And honestly, I have high hopes for Meta, and my take for Meta is if they keep doing what they're doing, we could easily see 750 Meta by next, and by this time next year, 750, 800 for sure. Like good stocks, they tend to pull back to where they were at. So Meta dropped to 5.
Notes, so we can go back to them at the end.
Yeah, that's fine. So Meta dropped from 5.8 to 580, and it's already pushing 700. I don't think it'll break 700 by February or by January, but leading up to earnings, we could see a 700 Meta for sure. I think
That's
so.
What do you think, just 700, or what's your...
Well, leading up to earnings. It depends. After earnings, can go either way, right? Meta usually moves 10% after earnings, so we could see maybe we could probably see from now to earnings and after earnings, if they're good, 710 to 720 Meta.
Yeah, well, I agree with you too, but yeah, we'll talk about that after. So moving on to NVIDIA, one of the biggest cash flow generating giants in the world. It's right now trading at 190. I don't know what's going on with my mouse here. There we go. Right now trading at 190 today. Markets are obviously open as we're making this podcast. And NVIDIA is very interesting. I love the company. I love the business model. Everybody's buying their chips, right? So it's a really crazy company and really crazy times for this company, because when Jensen Huang talks about bigger growth, nobody ever believes it, and he always manages to pull it off. But he was talking about some unbelievable numbers recently, saying he wants them to bring in an absurd amount of cash flow, and I think if anyone is able to do it, it'll be him and NVIDIA. But we'll have to see, right, Xander? So.
Oh yeah, I think the video will be fine as well, especially like you were saying how they were. How everyone's buying their chips, even though they have lots of market cap already. Or not market cap, what's it called? We're talking about this.
Yeah, market share.
Market share, yeah. They have lots of market share,
Yeah.
so they're not gonna grow maybe as fast as Intel or AMD. But actually, those stocks shot up a lot recently too. AMD went from like mid this year 150 to 2.
I'll pull it up.
I think AMD's at 213 right now.
Yeah, the difference with NVIDIA is that, say NVIDIA, just for an even number, they own 90%. They own 90% of the market share for the tech space, right? And all the GPU space. They don't have a lot more ground to cover, meaning they can't grow as well as AMD or Intel even. I'd rather say AMD because it's way more likely that AMD will be NVIDIA's main competitor. But when you think about it, a stock like AMD here maybe only controls 5% of all the market share, right, compared to NVIDIA. That means they got a lot more ground they can cover. So if they eat into NVIDIA's NVIDIA's market share and kind of become their serious, like, real competition as they are doing right now, you can see them maybe growing to 15-20%, and
that means the video will also lose some of their market share, meaning
it's going to be harder to generate profits, and AMD is going to explode, right? Like, they're going to be able to take over what NVIDIA's operations were doing, right? So that's kind of my way of looking at things. And is it really likely that it's going to happen? Probably not.
There'll always be good competitors. Like AMD,
100%.
AMD is going to be a competitor always.
100%.
Will they have the same market share?
There's nothing without that competition there.
Yeah, I don't know if they'll have the exact same market share, but I do think AMD will be very, very strong going into next year. Same with NVIDIA. Like, honestly, I could see AMD end of next year, 278.
Okay, fair play. That's honestly not that bad. I don't really know. It's tough to say. If everything goes right, I could see them by the end of next year between 230 and probably 250. That's my conservative estimate. I'm more of a, when we have good years like this, I like to play it more conservative. I don't really like to be an optimist. He's fishing out for like the bull case on everything. He thinks it's going to be a crazy bullish market. I don't really know what to think because it's all this AI stuff is really, really early, and they're looking to get like artificial super intelligence. That's their goal, and I think they might be trying like to get there a little bit faster than they actually can. They're saying that they're going to be able to get somewhere, and they probably won't be able to. That's my guess. It's hard to know.
I think 270 is pretty conservative for AMD. Honestly, I do think AMD will be good. I think they're gonna have a good run. I think NVIDIA too. NVIDIA we could see like it's at 180. NVIDIA we could see 250, 300 by this time next year.
NVIDIA's just an absolute horse. Like I could see a 250 NVIDIA, no problem. Like next year, if everything goes as it did this year, which is pretty like in my opinion unlikely unless we get some more breakthroughs in AI infrastructure build out. But yeah, I could totally see that 100%. I could see a 250 NVIDIA all day. What a great company.
Yeah, I think that we could see NVIDIA, Meta, and AMD performing very nicely next year.
Yeah.
Especially if we want to move on to Microsoft here. It's scrolling down a little bit. But click the middle button on the mouse. See what that does. Maybe that'll fix it.
Yeah, they fix it actually.
So yeah.
We'll let Microsoft sure keep talking.
Yeah, we'll go on to Microsoft. Microsoft also has been beaten up, and if you actually watch Microsoft, it usually lags a month, so it won't move. If most of these stocks will move, and then Microsoft will move or copy the move a month after, which is actually really neat to look at. So Microsoft, I think it's at like 488, 490 around that area.
Okay, why does it always do this? Sorry.
I think use this side.
No, it just freezes on me there.
That's okay. So yeah, I think Microsoft right now it's around 488. I'm not 100% sure. Yeah, 488, 487.
Pretty
so
solid.
Yeah, Microsoft it fell big time too. Honestly, like Meta, it fell from 560 to 488 in the span of a couple months. So I do think that we will see Microsoft bounce back, just like I said with Meta. And you might think I'm crazy, but like most stocks, they do bounce back to where their all-time highs were as long as they're good companies. So I do see Microsoft moving its way back up to 560, and honestly, it could end the year in the 600s.
I like Microsoft too.
Yeah.
I don't know. It's not really. It's what a phenomenal company Microsoft is, anyways. But it's just not really fully on my radar right now. Like it's there. Like it's still in the back of my head, but I'm not eyeing it down like I'm eyeing down Meta or Nvidia or even like Google, a company like Google. What a great company. But yeah, Microsoft is phenomenal. It's all the big time tech, right? If this AI builds out and it really proves to be what it's going to be, we'll see. I'm not saying it's going to be like the .com bubble, but it's maybe people's expectations are like the .com bubble. Maybe that's about it, because companies now, they have earnings and they report like reasonable profit growth and like innovation, right? So they're not just kind of guessing what they feel like it's going to be. So
I do think Microsoft is one of the better buys right now in terms of all these Mag 7 companies. It's been beaten down a lot, and same with Meta. But Meta's been climbing hard. Like if you're trying to trade Meta, like you missed lots of this run up so far. Like it moved $100. It went from 580 to 680, and now at 687. Now it's calmed down to around 660, and we'll probably see it float in that 660 to 700 range until February. Honestly, we need another catalyst to move Meta. But if it floats around there, Meta usually moves $40 or $50. Modest in earnings, as long as they do good. We could see a 720 Meta by February, like early February, because that's when the earnings are. And same with Microsoft, honestly. Microsoft, they smoked earnings last quarter, and they just fell with the market. Like this market, this has been a really, really terrible market. Like the past after October, like we've really had no edge if you're trying to trade this market. There's been it's been really tough. So it's been reacting in ways that shouldn't have been reacting, and you guys probably noticed that. So if you lost money just trying to stay level headed going into next year, I do really think we're going to see it again next year.
Yeah.
Data's been coming out good, and this is for the American market, right? Data's been coming out good. Inflation's cooling down a lot, which would coincide with stagflation, meaning that it's less likely, where it could still happen if we do see inflation data come out really bad next quarter or whenever it comes out next, and if CPI data is bad. But for right now, everything's looking really good. The fear and greed index was at 7, it's at 56, around there. The VIX are at 13, so there's not a lot of volume in the market either right now. So if you're looking to buy Leaps, it's a really good time. But you also have to look at the actual company and how their volume is and how volatile they are. But if you're looking for Leaps long term, you can start to look at them. But I really do think Microsoft is a really good buy right now in terms of if you're willing to hold. If you're willing to trade, I'd probably wait for earnings, honestly, before you do anything. We got to get another. I think that's what everyone's waiting for, really, too, in big money. We're waiting for earnings, and there's lots of data actually coming out in start of January. So that's probably why we didn't get the Santa rally that everyone was expecting, because we were waiting on lots of data. Right?
I think we're going to see the company's profits in February earnings, January earnings.
Not February, early February.
Yeah, Q1 earnings of 2026. So we'll see. But what stagflation is when you have slowed economic growth, like their GDP is slowing or halting. Your inflation is going up and your CPI data is bad, and the unemployment rate goes up, right? So you don't want stagflation because it's really bad for the economy and it's bad for bond markets and stock markets. Get that fully synced in. It's just bad for investing in general. You never make any money in a stagflation economy, and that's what pretty much the Fed tries to do, is they're just trying to kind of balance the seesaw, right? To make sure you don't get stagflation or tipping one way or the other on the scales, right? So
yeah, and what we've been seeing is what he said is good data, right? So it kind of destroys the stagflation thesis as long as the data stays good, like you're saying. And if the data does stay good, honestly, I do think we could see a beautiful market going into 2026. Like I said, Microsoft, I would buy a hand over fist right now. Honestly, Microsoft under $500, it's a really good buy. So I think, but like I was talking about the Santa rally, I don't think we're gonna see the Santa rally, and big money knows this, and this is because of data coming out. We have really important data coming out right at the start of January. So I think big money's me waiting for that, right? And then if we do see that, we could see a really strong January leading up to earnings, as long as the data is good. And why do I think that? Well, because tax loss harvesting's already happened. This market from October to now has been terrible. Lots of people have been losing lots of money, especially if you've been trading. So I feel like tax loss harvesting could have already happened, and now leading into January, we could actually see a strong year. So don't quote me on this, but I do think we might see a good January as long as we get right into the first week or two, data being really strong. I do think that January leading up to earnings, which is really early in February, I think like February 2nd to the 12th, there's tons of earnings in that little area. So if we see good data in January, we could see a nice run into February, and if everything goes good, February smokes, I think we could see a nice little run from February till summer.
Fair enough.
Well, and that'd be a very strong bull market, and I do think everything can take off. I do think everything is beaten down, so I would really keep your eye on the market and watch out for early January for all that data. Pretty sure it's CPI data that's coming out. But I do think Microsoft is a really good buy right now. If you're buying it at $480, and I think it's going to be at $600 by next year.
Fair enough.
$120 you're going to make on Microsoft. So yeah, for sure. So.
Well, moving on to Alphabet. This company was not. Analysts didn't have the best expectations for it even 6 months ago. They thought that ChatGPT and OpenAI was going to take over, right? They thought that Google was going to get completely destroyed as a search engine, and everybody was completely wrong. Google is still exploding with their searches, and they keep growing year over year. I think last quarter was 14% year over year, and which is unbelievable. So I just don't think Google's going anywhere. I think it is one of the top 3 stocks in the Magnificent Seven,
Oh, I
and all
agree,
big
yeah.
tech. All day, I love Google. Like, look at his shirt. He's
Yeah.
got a Google shirt on, right?
Yeah, but the problem with people in Google is people don't understand that Google has many sources of revenue. A great example is YouTube, right?
Right.
They have YouTube and they have their cloud space that is growing exponentially. It's growing so fast, it's scary. So I think people get wrong. Like, you were just explaining how analysts were basing it a lot off their search engine, right? Which is a fair thing to look at, right? Google was the biggest search engine, and it still is a search engine. We're using it right now. So
Right.
but I do think people get misled, and they need to understand that YouTube is still a thing, and their Google Cloud.
Actually, we're using Microsoft.
Yeah, that's fine. And we're using Google Cloud, so
Yeah.
like there's things that you have to keep in mind when investing in these companies, right? It's not only one thing, and that's where analysts probably got their expectations wrong. But I do remember April Google was at like 150, and we were loading up on that, so that was a good investment on our part. But honestly, I do not think Google's a bad buy at 300. I do think it's gonna cool down a little bit before earnings.
Yeah.
Maybe it's at 315.
Yeah,
maybe
Google's doubled in the last 6 months.
yeah,
right?
maybe we see it cool down, sit in the 300 to 315 range, and then, like I said, February everything's gonna explode. As long as these earnings come out good, everything's gonna explode. Like Microsoft and Meta are bound to just dominate, especially with how much they were beaten up. Google's actually, like you said, has had a good run. Same with AMD. So maybe February they won't have a crazy run, but I do think that Google is a very solid company.
Even pulling stats up here, I got Q3 2025 cloud reported 15.2 billion in revenue, up 34% year over year. So I think that was one of the shockers too. And even Q2 was 32% year over year. It's been unbelievable. They've been growing at like a 30 to 35% pace in their cloud revenue, and I just don't think anybody actually expected Google to pull through, right? Like it kind of blows my mind.
Yeah, Google has been Google's been doing very, very, very nice. So I do think Google is one of the stocks that we have to be keeping on our radar, especially going into 2026. I'm excited to see what they can actually do. My price range for Google is going to be a little bit more maybe to the neutral side, around like I think like 350 is a very reachable
Yeah, fair
target
enough. I could see that
for
too.
Google. Like that's like two. Like we see, honestly, I'm not 100% sure of Google. Like we might be able to see a 400 Google by next year. That's only a $50 move. So in the span of the 4 earnings that we could see throughout next year, 3 earnings, I do think Google can scale really far.
Yeah.
But like I said, we gotta see them meet expectations with earnings, right? We have to see if these companies don't beat earnings, well, then my valuation completely changes, right? Like I'm going based off these companies are going to be doing and keep doing very, very well, right? I don't expect Meta to miss again, right? Like I didn't expect Meta to miss last earnings. It was a tax hit, right? So I don't expect Meta to miss again, but without the tax hit. If that happens, I have to reevaluate Meta, see what's going on, inside the books, and make sure everything's going good. And if not, then I'm totally going to change it, right? I think it's going to hit 800 by next year, like by this time. But if they miss earnings next quarter and they miss again, well, I might have to relook what I'm thinking, right? So I'm excited to see how all this plays out, but I do think we will see a very strong 2026.
Yeah, fair enough. And I agree with him too for Google. We'll see how it goes. Big time 2026. He's got big expectations, so I like to keep it low key and kind of more on the bearish side, but we'll talk about that after. Moving on, we got Amazon. So I love Amazon. Amazon's great. You know why? It just hit me after the Christmas season just finished up. Everybody's addicted to ordering packages on Amazon. It's kind of what keeps them going in life. Walmart is completely different. To me, it's a completely different business model than Amazon, but it's still a phenomenal company, right? Like they got so much money, they're sending so much cash.
Walmart's old money.
Yeah.
That's what we like to call it.
Yeah.
Walmart's the old money.
Walmart's never going out of style, right?
No.
Like they've been growing unreal right now because in such economically unstable times, people are looking for cheaper groceries, so they're going towards Walmart instead of even like Target. Target's one of probably the worst performing companies in the last year, right?
Yeah, Target's been getting beaten up
And
really
they have
hard.
pretty much the same business model. It's just Target is too expensive for people, and I agree with them 100%. Walmart is where everyone's shopping for, even for toys. Now, Walmart has everything: toys, food, furniture, everything, clothing. Walmart has everything.
They have phones and stuff too, I'm pretty sure.
Yeah, they got all tech.
Walmart's got everything.
Walmart kicks ass, but Amazon, people are addicted to Amazon, and now with this Prime, people are addicted to ordering something and going to work, coming home and waiting for that package. They love it. I love it too. That's why I'm saying it. I'm coming from personal experience. I am so addicted to the business model. It is so phenomenal, and there is so much growth potential. Unlike Walmart, which is just a storefront, right? And people have to go into that store. They could end up doing their own delivery thing, which they do, but it will just never be on the same scale as Amazon's operation. And once they start implementing technology, they've even been trying out stuff with like drones, even though that's like probably decades in the future. It is still such a phenomenal business with so much growth. I love Amazon. It is one of my favorite stocks of all time. I love it. It's such a great business model. Jeff Bezos is such an amazing CEO. I just love it overall.
Yeah, when we look at Amazon in terms of safety too, I think Amazon, when we look at the Mag 7, I'm not talking about in the broad market. When we look at the Mag 7, Amazon and Apple kind of fall into my range of, okay, these stocks are predictable. These stocks kind of move with each other. You know what I mean? So if you're looking at, like, in terms of Mag 7, what I think are the safest and won't move as much as the other ones, like, for example, Tesla's got its mind of its own. We could see Tesla drop from 400 to back to 300, back to 280 in like a couple of days, where Amazon would never do that. And I'm not saying all of them will do that, but I'm just saying in terms of, like, I really do think Amazon and Apple are more the safe havens of the Mag 7, and you're not going to be getting crazy ups and downs. So I do see Amazon as a nice, safe stock.
Well, Amazon also has their AWS, which pretty much everybody runs on Amazon Web Services, right? Like that is pretty much what the modern day internet is ran on. So even like when they had their AWS shutdown, like their little glitch, it's happened before in the past, and it will happen again. And I'm just surprised it doesn't happen more often with how much stuff is on their servers. I'm in shock how they keep it up pretty much 24/7 every single day, every single year. Like it's only happened like what, 3, 4, 5 times.
Yeah, their AWS is very, very, very strong. Yeah, and I'm excited to see what they can do with that next year. Actually, So I'm gonna be keeping that on my radar.
All right.
That's what else? Good. We got Apple too, right? Tesla. We'll do Tesla. Tesla, Tesla. In my opinion, it's kind of its lone wolf kind of thing. It's people mistake Tesla just for an EV company as well, where I think they get that wrong all the time. I really do think that Tesla is you can, and I think you should base Tesla also on the tech side and on AI, right? Tesla, that is what they do. They are a very, very, very big AI company in my perspective, at least. So I do think Tesla. Would I be buying it at 500 or 4?
Me personally, it's at 480 right here.
Yeah, 480. I don't know. I would steer away unless you're trying to invest in it. Even if you are, I long term try not to time it. Buy the dollar cost average. If it drops back to 300, buy again. Drops back 200, buy again. Let it run back.
We'll do a separate video on dollar cost averaging and entering a stock.
Yeah, but I do think Tesla right now, for me at least, I wouldn't be buying it. Trading Tesla would have been phenomenal. If you traded
Tesla,
at
what, 200?
Yeah, even 300. Remember, it was at 300 earlier this year. So trading Tesla, you could have made some big money plays on these on the ups and downs. Like it went from like what 380 back down to I don't even know what that is, and then it just flew to almost 500.
Yeah, but as a long-term investor, that stuff doesn't really matter, right? So, but yeah, if you were gonna trade short-term, sure. But as a long-term investor, like we are here, it's not uncommon for people to be picking up Tesla at this price, I guess. Me personally, it's on my radar. Not looking to get into it at this price. Might be a little bit too expensive for me. I like to buy the companies when they're undervalued. Like I love to buying Google. Buying Google when it was sitting in that 148, 153 price range was a no-brainer to me. Like that's
we were stacking up.
That was an instant buy, right? Like
same with AMD. We were loading up on AMD.
Same as even like Meta, Nvidia at 100.
We got bet at 550. That was in April though. That was because of the tariffs. So we got really lucky with that. Trump scared everybody with his tariffs, so we were just
lots of people were actually wrong about the tariffs. So
which was surprising.
They thought it was gonna. All these analysts thought it was gonna fall apart, and I didn't even know what to think. Right? It's such a scary thing to think about because there's two sides of the coin, and as of right now, it's looking like the tariffs are not affecting America as bad as everyone thought. So, which is a good sign for America's economy, which isn't bad. So hopefully, their business model, whatever they think is going to happens, and they can execute their plan for the rest of this term, and hopefully give America some good economic growth, right? So
I do think, in terms of like what you were saying, how analysts, I do think everyone should have their mind of their own. I don't think 100%. That they should fully believe everything analysts say. And lots of fear mongering. We gotta watch out, right? Headlines are headlines, and they're to scare you. If you know stock is good, for example, Meta. All right, I love Meta. We'll use Meta as an example. You know Meta's a good company. You know they only missed because of their tax implication. and then people got stop loss and everything got triggered, and that's why the stock died, right? It's set at 580, 680 for a couple. I was watching as it was happening, right? A couple days it was sitting at 680, not even a day, and it just died. And once it fell through 680, everything started getting triggered, and then it just bled, right? And when that happens, you have to understand, okay, you can't touch it right now. You have to wait for it to sit. And then it sat at 580, 590 for a couple days. You should have bought. That's how you. And if it fell again, you buy more. But you have to understand long term, Meta should be fine. And you have to understand these headlines that everyone's saying Meta's dying and Meta's spending too much on AI, which could be true in the long run, or Meta missed earnings in their bad company. Like that headline that you can't listen to that. You have to go dig deep, understand what happened, right? And that's why none of my thesis has changed for Meta, because they didn't miss earnings. They missed on a technicality, right? They missed on a tax hit, meaning.
Well, I think people are more scared about their revenue spending.
Yeah, but the thing is they're not going crazy like other companies. Where Meta like in terms of how much they're actually making with all this stuff, and they've proven themselves to rebound.
True. Everyone just looks at the number and they're like, "Whoa, this number's bigger than the
Yeah.
other number that somebody else posted." They're not actually looking at the company's fundamentals. I agree with that 100%.
Yeah, so that's why I do think Meta could easily be at 800 next year.
Yeah. Anyways, moving on to Apple. I don't know.
Yeah, I like Apple. Honestly, I really their last earnings and how the new iPhone came out, everyone loved it. And if this keeps happening, I don't see why Meta couldn't fly even more. Or, I mean Apple.
They're doing those AI AirPods too with like the
I saw that
stuff, but I don't really know. Apple's not. I love Apple. Apple's great. They got such a big moat. They pretty much are phones. That is Apple. Apple's phones. Apple's laptops. Apple's tech. You know what I mean? So they're coming out with their new chips. I think they got the A19 chip. It's phenomenal. They've been making some crazy progress. We'll just see what they can do once they start innovating Siri to be pretty much an AI assistant. That is probably going to be their end goal, I'm guessing, because if I was Tim Cook, that would be my end goal. I don't know what just happened here, but if I was Tim Cook, that would be my goal, to just turn Siri into an AI assistant, right? Because that's pretty much what people want. Like, Siri's super outdated, super garbage. I think Siri is the worst thing ever. Like, the Google Pixel does it 10 times better. Even Samsung, they do it way, like, levels ahead of Apple right now. But I just think Apple is building out the infrastructure, and then they're going to hit pretty damn hard like they do every single decade with new technology, right?
Yeah.
So
I think, like I was saying with Amazon, Apple's another just safe haven in terms of Mag 7. Apple, 100%. It's kind of those stocks where, okay, it's not going to be very volatile. It's a safe bet. And if you're looking at the Mag 7, Amazon, Apple are probably going to be your safest. And you can never go wrong buying Apple at any price, honestly. Even at 270, if you bought now, it wouldn't be a crazy show as long as you're willing to hold long term. Whereas if you're buying Tesla near 500 or 490, that's like it's scary, really, right? Because Tesla could go to 600 tomorrow, or it could go to 300 tomorrow,
400, right?
Right. So you just gotta be careful with those kinds of plays. But I feel like Apple and Amazon are the two safe havens. And honestly, I do see lots of growth in Apple, like you were saying. They're trying to do new things, right, in terms of their AirPods and stuff. And I don't know, I feel like if you go walk around, more people have Apple. I have an Apple phone. We're filming.
Of course,
everyone
has
Apple phone.
Everyone has Apple, right?
And even if you look around, you look like all those YouTubers. Like every YouTuber's got an Apple iPhone, and they're going crazy over the iPhone 17, which probably really, really helped with all this stuff actually, and how they reported.
Well, the only thing I don't buy from Apple are MacBooks, because I know that all the other PCs on the market are levels ahead of Apple, in my opinion. So even like the Microsoft Surface Pros, Dell, HP, I think they all got better laptops. I despise MacBooks. I despise them.
MacBook.
I love every other Apple product. The headphones. I love the Apple Pro Maxes. I love the AirPods. I use all of them. I use the iPhone. I've seen the Vision Pros. They're pretty cool, right? So I just hate the MacBook. That's about it. Only thing I can't get behind. Anyways, moving on finally to the final stock we're going to talk about today, Oracle.
Ooh, I like Oracle.
He loves Oracle.
Oracle is one of my favorites this year. Made some good money on Oracle, but I do think Oracle right now is a phenomenal buy. Oracle. So I've been saying this the whole podcast actually. If you see a stock right now, what, 197? Oracle's at 198. Yeah. Okay, Oracle's at 198, and it was just at 300 to 330. This stock next year for sure back at 300. My 300 to 330. I see Oracle
That's
doing
unbelievably bullish, but I could see it. That's what, like 50%?
Yeah, that'll probably happen.
Really?
Yeah.
You think so, eh?
Well, good stocks, they tend to levitate back to what they were previously at as long as they keep doing what they're doing. Yeah, I do see Oracle at 300 next year.
For me, it's tough. Oracle.
And I would be if you're fine with it is a risky AI. Not even it is a risky AI
100%.
play, right? So if you're fine with a little bit of a riskier side play, Oracle for sure should be on your radar. I'm very bullish on Oracle. Everything in terms of what they're doing is improving. It's just they're spending so much on AI right now, where if it doesn't work out, they're gonna get destroyed.
Well,
So
I don't really know how else to explain it. It's $75 in 2023, and it peaked what at 250?
350.
Oh my goodness! See, I don't even know the stock that well.
Yeah.
350. But the thing with me is, it is a baby. This company is based on AI. It is AI data centers. That is what Oracle is. That's why we've seen it 3x, 4x in the last 2 years, because everything with OpenAI and all these other companies building out their AI. Like I said previously, if AI isn't what it seems to be and can't do the jobs that we want it to do, getting ASI, artificial super intelligence, or being able to build the infrastructure out, we could see a company like this go back down to double digits in a short amount of time. That's the only risk to Oracle. If AI doesn't work out, Oracle is going to fall apart. If AI seems to be what it is and lives up to all the hype that everyone's hyping it up to be, Oracle will probably be in the new Magnificent Seven of technology companies. 100%. I could see Oracle joining, and it could be like the Magnificent Eight in the next decade all day, because these companies are going to make some unbelievably big shifts in the future.
Yeah,
so
especially getting ahead now with all those data centers. I do honestly. I think
100%.
Oracle next year 300.
That's fair,
Yeah.
because it is, everyone is so bullish on AI.
These stocks have been beaten down so much where if you're not looking at this company right now, I don't know, you might be a little bit crazy. Just add a small position, maybe 5% of your portfolio into Oracle.
Fair enough.
Look at what they're doing. If you agree with it, if you don't, it's fine. But you look at how their company works, and one under 200, this company is a steal in my opinion.
All right.
Do you want to go over your top 3 picks for next year?
Yeah,
Top,
I'll give you my top 3, the ones that we just talked about.
yeah. In terms of like AI and tech.
Yeah. Okay, so for me, I'm not very bullish on next year's market. I like to be I'm not trying to bring the thundercloud in, but I like to be more conservative in my estimates, so I don't get an overinflated headspace, right? I like to keep a level head. I like to keep it short and safe. I have my numbers when it falls, blah, 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 you know what I mean? So my top 3 for the ones we just talked about, I'm going Meta. Meta next year, I could see anywhere from $700 to $800. That's my pick. More closer to, if we're getting really, really like intricate, I'd say the safe haven is 720 to 750 is where it will sit all next year. Like it might go from 6 to 8 to 5 to 9, but it will 7 to 750, right? And my second pick would definitely have to be NVIDIA. What a phenomenal company. I see a 250 NVIDIA in the next year or the next 2 years, right? So I stay for play in between where it's at right now, 180 to 250, I see it.
Yeah.
And finally, I'm going to have to go with, my heart wants to pick Google, but it just doubled in 5 months. Google is probably my favorite company, except for Meta. Google is probably my favorite company in the Magnificent Seven. But I'm going to go with, I'm going to go with Amazon. Everybody is doubting Amazon. So I think Amazon is going to be the future. That is all that's going to be left is Jeff Bezos' empire. It's going to be like a Costco on your phone.
Yeah.
It is like a Costco on your phone, but once if they find a way to start doing fresh groceries and they can open pop-up shops, it's going to be, they already have, I think, Amazon stores, like warehouse stores where you can just go in like it's kind of like a Costco. Yeah, Amazon's 100% the future. So
your top 3?
Yeah, I see Amazon 240 to 300 in the next year, 2 years, 3 years.
Yeah, we'll do 1 to 2 years.
You can do
2026. These are our 20. Are you
2026 to 8? Yeah, we could see
27. 2026.
Sure.
We'll do 1 to 2 year mo because we can't go that far.
Yeah.
So you think in the next 1 or 2 years you could see
240 to 300 if everything goes right? You know what I mean? The bear case is
those are pretty neutral though. You think from 2026 all the way through 2027, you think Meta will only be like 750? You think so? Go through from 2026 all the way out until end of 2027. So it's a full 1 to 2 years.
Probably a $300 Meta. That's what I'm thinking.
No, Amazon.
Or Amazon. Sorry, that's what I meant. $300 Amazon. $300 Meta is a different story. But
So we'll do 1 to 2 years. Your last three. What do you think the ranges?
All right, I'm gonna say $300 to $350 Amazon in the next 2-3 years.
1 to 2 years, yeah.
Whatever. Nvidia $250
Okay.
to $280, and Meta $780 to $850. That's in the next like half a decade, okay, or
1 to 2 years.
Yeah, 1 to 2 years. So half of 5 years.
I think I'm gonna go with in 1 to 2 years. I'm gonna go with Meta, Microsoft, Nvidia for sure.
Nvidia, eh?
Yeah. Oracle, 2 Oracles in there for sure. Oracle.
Well, give me your three. Give me your three.
I'll go.
It's Christmas.
I'll go Meta, Microsoft, and Nvidia. Okay, so we'll do Meta 750 to 900 next 1 to 2 years. Meta, I love Meta. If they keep executing what they're doing, I think lowest range will be in the next 1 to 2 years 750, highest 900. I do think that Microsoft is really undervalued at 488. I think Microsoft will be low range in the next 1 to 2 years 625, high 675. And I think Nvidia will be low end in the next 1 to 2 years 325 and the high 350.
Fair enough.
And then my bonus pick, Oracle
Oracle
low 333 and high 400. That's my fun shot in the dark. If AI executes, Oracle's gonna explode.
I agree 100%. If they can find a way to make any more breakthroughs and kill this AI winter, we'll see AI move. Now, final for both of us, the SPY. What do you think? I think SPY's at 680 right now. So what do you think you can see the SPY at in 2 years' time?
2 year time, after all what we were just talking about, what we think, SPY just moved, 18% this year?
Yeah.
So I see it
if you have 2 more 18% years, that's unbelievable. That never happens, right?
Yeah, I think SPY next year will have another 15%, and then maybe the year after that, 12%. So
really?
As 27%.
I can see the hype moving on to next year. I can see maybe another 10% next year, 15%. But then, if this AI does not make any more progress, I could see it maybe doing a 3% year, 5% year, something low, right? Like we'll have to really see. It's very.
Yeah, you're keeping it modest. You're saying that most companies just pull back to where they were and then just sit.
Too early to tell.
I think that these are going to explode.
Okay, fair enough.
So I think SPY.
I can see a 750, 800 SPY in the next 2 years.
750,
That's my most modest prediction. The
see.
SPY is so overvalued. Its price to earnings ratio is the
750 to what?
highs.
What'd you say?
750 to 800.
All right, I'm gonna go a little bit higher. I'll say minimum 800, high 860.
But that's a good case. So that's a bull case. I'm more of a stagnant. Like it doesn't really.
Yeah, like
move.
it's good. No, that's still good returns though.
100%.
Not actually, not really. That's what'd you say? Wait, what'd you say? SPY's gonna be
750 to 800. It's all right. That's still like 3, 4, 5%.
Yeah, that's not bad.
That's good. That's what the SPY is supposed to do. You know what?
Yeah, I'm excited to see how these play out.
Me too.
Both of our valuations would change based on if how companies do.
100%.
If companies smoke,
Nothing is set in
and AI,
stone.
and AI flies, he could change his. If AI is not doing good and companies miss, well, I'm gonna change mine.
Absolutely.
So these are just our thoughts based on present, what's going on right now. Hopefully, you guys agree with us, and I would love to hear some of your feedback. Anything else to say?
No, we'll just close it off here. Anyways, thank you guys for tuning in, and we'll catch you guys in the next one. We got lots of stuff to talk about.
Oh, yeah.
How to invest, how to dollar cost average, talk about energy, talk about Canadian and American energy in North America.
That's gonna be a good one.
Yep. So we'll catch you guys in the next one. Thank you very much. See ya.